Well, good Friday to you. Thank you for joining us today. I'm Marlon Bowling, your tour guide to the ag commodities. Well, boy, I tell you what, we're finally at that convergent time where we had a lot of things that are going to be taking place today and over the next couple of trading days. So just get prepared, get to be where you want to be, because it's going to be very busy and it's just going to go crazy here for a couple of days. Now, to help us navigate the waters, I want to welcome aboard Brian Hoops, the president of Midwest Market Solutions. He's in Springfield, Missouri, and he joins us right now. Okay, Tammy was talking about all the derecho damage from yesterday. We were watching that as it was unfolding yesterday afternoon. That was quite an event. I know there's a lot of damage out there, and we feel for each and every one of you out there that maybe had some crop lay down or lost some structures or some property or what have you. And it looks like it's reloading again today, Brian. That's a major concern. So the trade has to focus on that, but it also has to focus on the USDA reports today. And then now we'll add something else to the mix here. We just got word here, and I think you did too, Brian, that we had an overnight export sale. And this is something I haven't heard for quite a while. Soybeans to China. It was 132,000 tons. Now, that kind of came out of the blue. Did you know anything about that? Do you think that's why the soybean market rallied overnight?
Yeah, good morning, Marlon. I think that's a big part of why we saw some strength overnight in the soybeans. We took out Thursday's highs, which is technically positive, and we had this fundamental news. This is for the new crop category 23-24. So I don't think this will be really impacted by the trade. We're going to largely ignore it because there's too many other things to focus on. Specifically, you talked about that derecho that went through. That is something that I think is right now really undetermined how much damage was caused, but we know there was significant damage in some areas. Yes, it brought some badly needed rain, but there's a lot of pictures about corn being flattened. And you remember back in August of 2020, the same thing happened to a lot of crops in Iowa. And that was basically what put the low in for the corn market in that time frame. And we started to rally. It was this news, because it is serious. This crop, there may be something there to harvest, but it's going to be difficult to harvest. It's going to be very hard to get any type of yield off of this. And so hopefully this is kind of the catalyst that is going to jumpstart this corn and soybean markets and give us another run back to the upside. But of course, you have today's reports kind of looming over the markets. You have rain in the forecast for some of the driest areas of Missouri and southern Illinois, 2 to 4 inches in the forecast for this weekend. So there's a lot of things at play. Plus, you have a holiday coming up on Monday night and Tuesday. It's the end of the month, end of the quarter. There's just so many things going on right now. That I think the close is going to be very important to see how the market deciphers everything and processes everything going into the weekend.
Oh, absolutely. Now, let's take a look at our quotes from bar chart then, and we'll recap last night. So now, when we came across the finish line, and this would have been, this would have been right before that USDA overnight export sale announcement came out. So that didn't have any effect on our close on the Globex. Just wanted to point that out. September corn finished 3 3/4 higher overnight at 527 1/4. December was up 3 3/4 at 532 1/4. In both cases, they were off of their overnight high by about a nickel. Now, in soybeans, we ended up with the August contract 18 3/4 higher at 1386 1/2. Now, that's what I was talking about. It was much stronger than the corn, and the soybeans wouldn't have been impacted by that derecho really at all. That was off of its overnight high by about a dime, though. And November was 15 3/4 higher last night at 1281 1/2. Okay, let's look at Chicago September wheat then. On that market, we had September at 673 this morning, and that was up 5 1/2 cents. In Kansas City wheat, we had September 10 1/4 higher. 810 1/4 was the last trade. It dipped down below $8 momentarily, and then closed back above it. Now, on spring wheat in Minneapolis, September was 13 3/4 higher at 839 1/4. In the cotton market, we had December finishing 74 points higher this morning at 79.77. I guess that's probably still trading. Now, I want to take a quick break here, Brian. And when we come back, I want to talk about these grain markets' impacts on what's going on with the livestock. And I think there's some outside information we need to consider as well. So we'll discuss all that when we come back. Okay, we're talking with Brian Hoops, the president of Midwest Market Solutions, and he rejoins us here. So anything can go in the grain trade today. Everybody is expecting the unexpected, I guess you could say. Now, on the livestock side, how are they positioned as we go into this? I had someone tell me yesterday that, today's grain reports could have more impact on the livestock than other information. So what do you think about that?
Well, there's a lot of things affecting livestock markets. What happens with corn is certainly going to impact cattle and feeder cattle. Feeder cattle have rallied sharply, and even cattle have rallied this week despite softer cash trade. There's a couple dollar weakness in southern trade, about $3 softer in the north, which is kind of expected this week as they're buying for a holiday shortened kill week next week. But then next week, they're going to have to come back in and buy for more of a full kill. And that should be probably at least a fully steady type market. So, the cattle market's positioned fairly well with narrowing up the spread between the cash and the futures. The hogs are going to be influenced by the hog and pig report that came out yesterday afternoon. The numbers were a little bit above estimates, so it's slightly bearish. And because we rallied going into it on short covering, we could give back a lot of that rally. I think today I would look for hogs to come out of the open here much weaker based off of those numbers. And then you have the end of the month and end of the quarter. And a lot of times we talk about position, especially in the cattle futures. It seems that they are directly impacted. We did have an economic report, PCE numbers that came out this morning. Those were about as expected, but suggest that maybe we're going to see another rate hike in July. And in anticipation of that, the Dow has rallied while the U.S. dollar has weakened. So there's a lot of things at play, but I think the cash trade pretty much wrapped up for the week in the cattle market, and we're probably going to be steady to higher, I think, at least initially in the cattle futures until those grain reports come out at 11.
Yeah, the Dow is currently 203 points higher on that nearby September futures contract. Let's look at the U.S. dollar index. It's down about 300 points right now. Okay, just to recap where we finished up yesterday on the livestock trade, we had the August closing 62 higher at 174.50. October was up 65 cents. On the feeder cattle market yesterday, we had August up $2.12. That'll be hard to improve on. That was at 242.37 when we wrapped up the day. And on the lean hog market, well, we had yesterday's August contract closing $1.22 higher at 92.32. As Brian mentioned, that could find some pressure here today. We'll see in just a moment. Well, thank you, Brian, for all the information. Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri. So, Tammy, the table is getting set. We're about ready to begin.